Hey there, everybody. Thomas Wood with Basecamp Trading. It is Friday, June 23rd, and we are going to continue on with the Mistakes Traders Make series here for YouTube. And these are just some of the most common mistakes that, with working with thousands of traders from around the world over the years, that we have found traders make, and also how to avoid them. And today's mistake that we're going to talk about is chasing a market. And this happens all the time, and it's one of the biggest, most detrimental things you can do to your trading account that we've seen. And that is, you see a market moving and it starts to run and you didn't get in when you were supposed to, but you see it keep on moving, and then your emotions kick in and you go, oh my goodness, I'm just missing the whole entire move. That thing's never going to stop. And you jump in, and it seems like as soon as you jump in, it turns around and goes the opposite direction almost every time. All right, so for example, this is a setup we had last week that triggered and then that followed through very nicely this week and gave you two other entry opportunities earlier this week that we talked about in the trading room. And that was a breakdown in coffee. Now, overall, coffee had been in a downtrend. Okay, so this was a downward moving market. But then we went into about a 2-week period of sideways consolidation, and we set up this really well-defined support at 127.5, where we had hit it multiple times. You can see 1, 2, 3, 4, 5, 6 times we had hit that support. And we've talked about before in the price action trading series that the more time support resistance is hit, the higher the probability of a strong breakout when it does occur. Well, what ended up happening, we broke through that support. We had a very nice run, a very nice flush in this market, just dropped through the floor from 27 all the way down to 15. So you had about a 17 or a 12-point drop here, not 17, a 12-point drop here. And then today, this thing retraced with a vengeance. We went from a low yesterday of 15.5, and we're closing today up at almost 23, right at 23.25. So you had an 8-point just about retracement on this down move. Now, one mistake that a lot of traders might have made, and that we talked about today in the trading room to avoid and not to get in this trade today because it was too extended, is they see, well, man, this thing's just falling through the floor. They see the big move they missed yesterday, and they go, you know what, I'm going to jump in it today because this thing's just never going to stop. Only to have this market turn right back around and rip right through the roof and knock them out with a big loss. So one of the things I like to do to explain to people kind of what this concept is I put a graph up here. Looks like this. This is the probabilities of a trend continuing or of a move continuing. All right, now when that move first starts, you have pretty good probabilities, all right, but there's still a chance of a little bit of a false breakout and reversal. But once it's gotten through the support resistance and that move has really started, or that trend has really started, the probabilities start to increase slightly. All right, and what we're looking at here is probabilities of continuation of the move and then the amount of time that goes by. All right, and it starts to pick up some steam, and you're saying, okay, the probabilities are even better, even better, even better. It's going to continue. And then what happens is it kind of starts to flatten out and roll over, and then you start taking a nosedive. And the longer you continue to trade that market, or the longer that move continues to go, the further that trend continues, the lower the probabilities of you getting in and having that market move far enough to actually make you money. So when we're trading, we're looking to get in right in this area. Not as soon as it breaks, but making sure it gets through a little bit to actually guarantee or ensure that we're not going to have a false break. Wait until it starts moving, and then we jump in right when those probabilities are at their highest. All right, and then we look to catch the nice move, and then as it gets further away, we start trailing our stop down behind it because the probabilities of continuing lower and lower, and then eventually it's going to either go back into consolidation or have a big reversal like you did today. So the point of today's video, though, is make sure you're not chasing markets. All right, you want to be getting in right after the initial breakout, on one of the first bounces, and then you look to ride it out. Do not be chasing a market just because you see it go really far and it takes off. I would rather personally sit on the sidelines and miss a move entirely than I would chase a market and take a bad trade. All right, so that's all I have for you for today. I hope you enjoyed it. Don't forget to like and subscribe, and also you can go through, and I just put together a new playlist here for all the Mistakes Traders Make series because I got some really good feedback. People telling me that they were really enjoying this series, so I hope it helps. I'll see you in the trading room in the future. Again, don't forget to like and subscribe to the channel, and until next time, happy trading.